look at the Fitch rating report on the the heightened risk, sovereign risk due to, heightened sovereign risk exposure, which resulted in a correlation or a relationship between the Sri Lanka commercial bank's portfolio risk to the sovereign risk of the government of Sri Lanka, because of the Sri Lankan commercial bank's assets being invested in the Sri Lanka development bonds, so through all, and also because of this situation, the Fitch rating not rating Sri Lankan commercial banks above CCC local currency issuer default rating and CCC negative score on the banks operating in Malmo. They have decided not to rate Sri Lankan commercial banks above CCC rating, because Sri Lanka government rating is CCC. Now that is a question when the Sri Lankan commercial banks ratings are downgraded like this by the Fitch rating. In order to handle this issue, let me go through this report again, because it's not a big problem for our country's economy, because the Fitch rating says Sri Lankan commercial banks have about 1/3 of their combined assets exposed to the central government as at end of 2020. That means assets of commercial banks refers to the its lending. Assets means payments due, payments due within 1 year or more than 1 year. So those are mostly about 1/3 is with the government of Sri Lanka, according to them. So that's correct. So, but the thing is, because of this situation and also the risk of sovereign stress, because of the spread of the yield payments of the Sri Lanka development bonds issued by the central bank, they have decided not to, rate Sri Lankan commercial banks above CCC rating assigned to the Sri Lanka government rating. Now that is the issue here. So let me look at this, and they say the Fitch rating also say the foreign currency government securities, that means the Sri Lanka commercial banks total investments in the Sri Lanka development bank's foreign US dollar development bonds was about 6.4% of their assets. That means a total Sri Lankan commercial bank's assets lending portfolio, about 6.4% had gone into the Sri Lanka government central bank issued Sri Lanka development bond investments. And also they say that the investment by the Sri Lankan commercial banks on the Sri Lanka development bonds is as a percentage of the equity or the capital invested by the shareholders and the accumulated profits of the Sri Lankan commercial banks is about 78% as at end of 2020. So now they also say they estimate about 10% value reduction in the foreign currency denominated government securities. Because they estimate about a 10% value reduction in the Sri Lanka 10% value reduction in foreign currency denominated government securities. That means they expect a value reduction with regard to the Sri Lanka commercial banks investments in the foreign currency government securities. They do not specify which government, but I think they refer to a 10% value reduction, estimated value reduction in the Sri Lanka development bond probably securities. So as a result, they say the large Sri Lankan commercial banks equity 1-tier ratio would decline by 18 to 219 basic points as at 2020. Now, so here the situation is, now when we look at this situation, we can see the major concern here is about the capital, how this exposure of the risk of a commercial bank is measured. Let me continue it in the next video.